So where should I look? Hello. Welcome. And that's the camera?
Yes.
Okay, perfect. Well, good evening. Hi, I'm Jennifer Acey with the Township Committee, and I'm welcoming you to our inaugural presentation on Understanding Bernard's series. The first topic is focused on taxes, which is what every single resident cares about the most. The purpose of these series are to give illustration and highlight into our town how it works and to allow our residents the opportunity to learn more. So we're going to start with the most important topic, and I am so grateful to our employees for who are going to walk us through this wonderful presentation. This presentation is going to be recorded and posted on the website so others can view it at its leisure. And for those of you that are here in the room, you have the privilege of directly asking the questions that you might have. And this will be a format of a presentation and a Q&A. So what I'd like to do is I'd like to introduce our presenters. The first is Annie Rivera. She's been a part of the Bernard Township Finance Department since 2016. She served as an accounting specialist in the Treasury Department until 2018, where she was promoted to administrative coordinator. Annie brings a wealth of accounting and bookkeeping experience to the township and has recently completed the Certified Municipal Finance Officer Certification Series with the Center for Government Services at Rutgers University and has been credentialed as a Certified Municipal Finance Officer by the New Jersey Division of Local Government Services. Additionally, Sean McCarthy, who will also present, currently serves as Bernard Township's Chief Financial Officer, having also served as the Township Treasurer from 2015 to 2018. Sean brings a total of over 17 years' experience in municipal government to the Township, having previously served as a purchasing agent for the Township of Bedminster and the Borough of Bernardsville. Sean is certified by the New Jersey Division of Local Government Services as a qualified purchasing agent and certified municipal financial officer. So I am very grateful that these two have very graciously agreed to share with us more about their function and the impact, how it impacts our township. And I hope that you find it useful, and we'll look forward to the Q&A session towards the end. Thank you.
Good evening. Thank you for coming. Thank you, Jennifer Acey, for the intro. To start, we'll be looking at Bernard's Township Finance Department. What makes up the Finance Department? What are some of the responsibilities of this different areas of finance? So as we can see, the Finance Department is comprised of 4 divisions: tax assessment, tax collection, purchasing, and treasury. We'll start off with the tax assessment division. It is to maintain a fair and equitable tax base for the township based on sound assessment practices and to treat all property types and owners impartially. The tax assessment division is comprised of 5 employees, one being the certified tax assessor who holds a certified tax assessor certification from the state of New Jersey. He is responsible for identifying and placing a value on every parcel of land within the township's borders. He also, just a few duties of the certified tax assessor, he provides defensive appeals. He makes appearances at county tax board, state tax board. He's responsible for farmland assessment, valuations, review of applications, inspections. Bernard's Township participates in the state-approved annual reassessment program since 1989. What does this mean for Bernard's? It means that annual reassessing requires inspection of all properties over a 5-year cycle. Therefore, approximately 20% of all township properties are inspected each year. The purpose of inspections is to obtain accurate data on each property, therefore helping us to achieve a more fair and accurate assessment. All properties, physically inspected or not, will have their assessments reviewed annually. And this is just a little side note. Each year in the beginning of February, all property owners are mailed their assessment postcard containing their assessed value for the current year. If you have not received your postcard, you can contact the tax assessor's department. And I think this year they are actually now white. They used to be green. Moving on to the tax collection division. They are responsible for the billing, collection, and reporting of taxes for all non-exempt township properties. They also collect and report sewer user fees for all properties within the Bernards Township Sewerage Authority. The tax collection division is comprised of a staff of 3, one of them being the certified tax collector. When we think about tax collection, we think about 3 things: billing, collections and reporting of monies, and enforcement. So the tax collector is responsible for ascertaining the amount of taxes due from each taxpayer and informing each taxpayer of this fact. He is also responsible for the collection of monies, which means he's responsible for receiving and accounting for payments upon notification of taxes due and ensuring the proper disposition of funds received. And lastly, with regards to enforcement, the tax collector is responsible for initiating and carrying out procedures for enforcing the timely payment of taxes by the taxpayers. So this includes, but not limited to, application of interest on delinquent taxes, tax liens, and tax sales. If we look at this slide right now, the tax collection has 10,672 tax accounts as of January 1st and 7,225 sewer accounts as of January 1st. Property taxes are based on the assessor's valuation of real property and levied for the calendar year. Taxes are due on the 1st of February, May, August, and November. There is a 10-day calendar grace period for each. Sewer bills are billed mid-December, due January 1st, and mid-June, due July 1st. Sewer user fees have a 30-day grace period. Postmarked is not accepted for tax and sewer payments. Bernards Township currently accepts 4 options to pay bills. One is ACH, which is a free service. It is withdrawal from your checking or savings account. You can do that online. Second is we do accept credit card payments. We charge a convenience fee of 2.95%. Third, we do a direct withdrawal. You can get a form in office or online, and we will debit your account at around the due date. Fourth, we offer, of course, in person. You can pay us in person. During COVID, we actually had a Dropbox installed. It's in the back hallway by Recreation, and that is available 24/7. It's under surveillance. You can come anytime and drop off your payment. We encourage residents to pay electronically. As we know, the U.S. Postal Service is kind of slow, and it's just an easier and it's a protected and easy method. Let's see here. Certain deductions are available to residents: veteran and widow deductions and senior deductions. More of that is available on the website or by contacting the office. The next division is the purchasing division. Purchasing mission is to provide a purchasing system that ensures integrity, fairness, and open competition while maintaining a fiduciary and ethical trust, seeking available resources that ensures paramount services to the municipal departments in a timely manner and at the lowest possible cost. As we like to say in finance, the money we spend is not our own. So what does that mean for the purchasing department? The goal is to provide the highest quality of goods and services to various departments in a timely manner and at the lowest possible price. The Division of Purchasing coordinates and oversees the acquisition of all services, equipment, and products utilized by Bernards Township in all its daily operations. The department is staffed by 1 QPA, which is a qualified purchasing agent who also holds a certification from the state of New Jersey. He is responsible for compliance with all local public contracts law. The laws that govern the municipality in regards to purchasing can be very stringent, and that is, of course, to prevent fraud and to safeguard public funds. He also establishes policies to enforce municipal, state, and federal purchasing regulations. A few other things, he communicates with vendors, he maintains bidder lists, he prepares purchasing contracts. If he handles the disposal of obsolete and/or personal property, so he will hold an auction once or twice a year, depending if needed. The monies that are received from the auction are turned over to the municipality, and this revenue is also included in the yearly budget as anticipated revenue. There are several different kinds of procurement methods. These are, to name a few: requests for bid, requests for qualifications, requests for quote, for proposals, and for information. One of the most common ones would be request for quote. Any purchases between $2,500 and the statutory bid threshold of $44,000 requires a request for quote. Another one might be request for bid, which is required for any commodity, service, or public improvement when the anticipated expenditure exceeds the statutory limit of $44,000. And just to wrap up on the purchasing department, these are the main focuses. Again, we stress compliance with state procurement contracting laws which govern expenditure of public funds, contract administration compliance, which is once the contract is awarded. It's making sure that the governing agency and the contractor performance is met to meet the requirements of the contract, to provide timely responsive support to internal clients, to ensure good quality products and services at competitive prices. Purchasing department is very involved in our annual audit to keep abreast of current developments in the field of purchasing, market conditions, pending and new legislation, to formulate and recommend purchasing policies and procedures. And the last division in finance is treasury. Treasury is responsible for all functions relative to the receipt, disbursement, and reporting of township funds. The biggest item would be payroll. Every time when we go to seminars or conventions, the one question you get asked is, who does your payroll? Bernards Township does their payroll in-house. We do not use a third-party payroll service provider to process our payroll. Treasury handles the payment of federal and state taxes, the payment of all deductions, pension, 457, levies, union dues, any voluntary benefits. We try to promote as much to go green, so all of our employees are 100% paid by direct deposit. We don't cut any checks in payroll. Accounts payable is also handled by Treasury. They review all purchase orders for accuracy, all invoicing. They process checks or ACH payments to vendors. Again, we are transitioning our vendors to go green and sign up for ACH. Less paper, less printing, less postage. Treasury also handles cash receipts. We maintain logs, safes. We have a 48-hour deposit rule. We maintain a great banking relationship. We've set up all our bank accounts with fraud protection, one being Positive Pay. Any checks that we cut are uploaded to our banking website. So if anyone tries to submit a check, a fraudulent check, it is stopped. We have ACH debit protection. Anyone who happens to get our account info, routing info, cannot just debit our account, it will be blocked. The Treasury functions here, that we also maintain all bank reconciliations, books of original entry, and general ledger. We complete them monthly. All accounts are verified and reconciled to the general ledger. We provide all of these services, payroll, AP, cash receipts, also for the Sewerage Authority and the library. There's a lot of financial reporting that takes place in Treasury. One would be the annual financial statement. That'll be on the next slide. We handle annual and supplemental debt statements. As you know, Bernards Township is currently debt-free. We have 2 audits that take place, one for Township and Sewer, which are normal year-end audit. We handle 2 workers' comp audits for Township and Sewerage Authority as well. We handle all payroll reporting, all W-2s, all 1099s, IROC, which is internet-based report of contributions for pension. We handle Affordable Care Act reporting, which is the reporting of health insurance to the IRS, and we furnish statements to employees annually. We feel strongly that for audit, the finance department, we complete all of our audit schedules and our annual financial report. We believe, these are our reports. We take responsibility for them, and when the auditors come in, they audit that report. Bernards Township is one of the few towns in New Jersey who completes their own AFS. A lot of towns have their auditors do it. It's due every year. For the prior year, the AFS reports the results of all township financial activity for the prior year. All of these reports are available on our website. Budget, prior year audits, that can all be found on the website. Those are all the divisions that make up the finance department. One more item we like to talk about is shared services. Shared services are powers, duties, or functions that can be shared between municipalities. Shared services can reduce costs for a municipality and positively impact the property taxes. With certain pressures on budgets, many communities are considering shared services with neighboring municipalities. Currently, these are all of our shared services. We are the provider in services for sewage authority, library, public health. We have a few towns, and we provide fire prevention for Bernardsville. In turn, we are compensated for those services. And then we are on the receiving end for court services with Bedminster and, of course, Somerset County Recycling. This pretty much wraps up the finance department. Sean will go into more detail about assessing and budget and your tax dollar. Thank you.
All right, good evening, everyone. My name is Sean McCarthy. I currently serve as the Township's Chief Financial Officer. And as you'll see, I lost the coin flip between Annie and I, and we'll be discussing taxation for the next three and a half hours. No. So what I'm hoping we can do tonight is kind of give you an overview of what the Finance Department in Burns Township does, as Annie's just discussed. Kind of go over, in general terms, the nuts and bolts of how the budget works, how taxation works, and maybe dispel some of the common misconceptions that are out there about municipal finance. Often the way that we are required to do things seems onerous and cumbersome, but there is 99% of the time, a method to the madness. So hopefully we can kind of get through some of that and how we do things. So I thought we'd start with just a couple of general tax terms. One of the biggest confusions we see often is, what is the difference between the tax levy and the tax rate, right? So those are two distinct different things. The tax levy is the total dollar amount to be raised by taxation to be used as revenue to fund local government programs and services. So basically that is the total pool of tax dollars that we need to collect in order to provide all of the services that we provide. The property tax rate, on the other hand, is the percentage rate calculated against the assessed value of each homeowner's property ad valorem or according to value. So in New Jersey, property taxes are assessed by value or by the value of your property, and the property tax rate is the number that we use to assess your property per $100 of value. So what is assessed value? Assessed value is the value placed on real property based on market value to determine ad valorem property taxes. So two things in that definition that we also need to define. One being what is market value, and that is the price a willing, knowledgeable buyer would pay a willing, knowledgeable seller on the open market. And that's, of course, what our property tax assessment is based on. It is based on the real estate market and comparable sales in your neighborhood. And then finally, what is real property, right? So we only assess real property, which is land and all the things that are attached to it. Anything that's not real property is personal property, and personal property is anything that isn't nailed down, dug into, or built onto the land. So that means when our field inspector from the assessor's office comes out to take a look at your property once every 5 years, he's looking at your property itself, the land, he's looking at your home, the structure. He is not looking at your window dressings, he's not looking at your dining room set, although they may be very nice. They do not go towards the assessed value of your home, which is a good thing for you. So the township serves as the collecting agency for the four taxing districts that you see listed there. The township itself, Berners Township Library, Somerset County, and the Board of Education. Included in the taxes that we collect for Somerset County is the not only their operating revenue, but their open space tax. The township is responsible for collecting and then distributing those levies to each entity. So January 1st, the library receives its full tax levy of just about $2.4 million. Every month, township cuts a check to the Board of Ed for about $6 million, and quarterly we pay Somerset County their levy at about $6 million a quarter. As far as being the collecting agency for all taxes in the district. By statute, the township must pay other districts 100% of their tax levy, regardless of collections. So that means that the school, county, and library get their full tax levy regardless of who does and doesn't pay their taxes. Essentially what that means is we do all the work and we get paid last. In fact, according to the law, in the event that we do not collect a sufficient level of taxes to pay the full amount of the school and county's levy, we'd actually be required to issue debt to cover those amounts. And there's actually a specific borrowing vehicle called a tax anticipation note to do that. Fortunately, here in Bernards, we've had very good collection rates over the years. You know, a typical year for us is over 99%. That's not to say, however, that things can't happen. So, for example, most recently, early 2020, it's the beginning of COVID. Just like everyone else, we're entirely unsure of how it's going to affect not only the township's operations, but how the shutdown of the economy is going to affect our taxpayers' ability to make their tax payments on time or at all. And that was a real concern for us. So what we did was actually essentially go out and get pre-approved for these tax anticipation notes to issue debt to make sure that the school and the county received 100% of their levy in the event that we weren't able to collect all our taxes. Now, fortunately, that wasn't the case, and our collection rate stayed pretty stable over the last 2 years. But just an example of conditions that can arise and change that strong collection rate that we typically see. So here's what that total tax levy looks like. So this is the total levy collected in 2021. You can see that the full levy, just under $143 million. And you can see the distribution of that levy over in the pie chart on the right. The school having the largest share of that tax levy at 66%, followed by the county at 16%, township at 15%, municipal library at 2%, and county open space at 1%. So this means we collected, recorded, and reported on just under $143 million in tax revenue, distributed $95 million to the Board of Education, $22 million to Somerset County, just over $2 million to Somerset County for their open space tax, and just under $2.4 million to the Bernards Township Library for their portion of the levy. That balance of $22 million is kept by the township to fund our municipal budget, and that roughly funds about 50% of the township's budget on a given year. And here's what the revenue side of the township's budget looks like. So this is just looking at the township's piece, that $22 million, and how it is used to fund the total budget for the township. So total township budget this year, roughly $42 million. This is actually 2021's budget revenues, but you'll see, final revenue after everything's been collected, taxation funded just under 50%, 48% of the total budget. Unlike the state New Jersey and the federal government, we're required to balance our budget. That means that for every dollar that we appropriate or plan to spend, we have to have a dollar of revenue to offset it. I think one of the other misconceptions we also hear is that every dollar we spent is raised by taxation, and that is not necessarily the case. As you can see, it's about half. About a third, or just under 30%, comes from surplus every year, and then the remaining balance of about 23% comes from our other revenue categories that you'll see there. So that's what tax revenue looks like as far as funding the township's budget every year. So what does that mean in real dollars? So this is an attempt at a representation to show what the average assessed tax bill broke down to each of the taxing districts. So the average assessed tax bill for 2021 was just over $13,000, and as you can see, just over $8,600 of that went to the Board of Ed, $2,227 to the county, just under $2,000 came to the township, and $262 to the library. The one takeaway here is that when you hear either myself or township committee discussing the township's budget and the township's tax levy. The piece that we're talking about and the only piece that we have any control over is this section here for the township. The school, county, and the library, they are their own taxing districts, and township has no control over those pieces. So this is a finance presentation, so we do have to do a little math. I promise I'll keep it to a minimum. So this is how to calculate the tax rate, and it's really simple. It is essentially the amount to be raised by taxation divided by total assessed value times 100 gives us our tax rate to be applied to your assessed value per $100. So what is that amount to be raised by taxation? That's what we were just talking about previously, the township's tax levy. And as you recall from the previous slide, that is the total revenue required to fund our budget, less surplus anticipated, less other revenue items. Leaves us with the total amount that we need to raise in order to fund the budget. This is 2022's budget. For 2022, that comes in at $21,540,783. We divide that by total assessed valuation of the entire township, so that's the value of every parcel in the township. Multiply that by 100, and that gives us our municipal services tax rate for 2022 of 0.299 per $100 of assessed value. Now keep in mind that this is municipal services only. It does not include the school, the county, or the library. And this is taking a look at what makes up that total assessed valuation number. So total assessed valuation, $7,199,859,893. And here, this is what you're looking at is essentially the end product from the assessor's office every year. So they've taken each one of those property line items, just over 10,000 parcels, broken down into their individual class of property, assigned a value to the land, the improvement on the land to come up with total net value. And this is what we apply to that amount to be raised by taxation in order to come up with our tax rate number. So the answer to that question is no, and we know that because now we know what real property is. Happiness is not real property, fortunately, so feel free to find as much happiness in your backyard as you can. As Annie had mentioned, Berners Township is a reassessment district, and we have been reassessing since 1989. We're in fact one of the first municipalities in New Jersey to adopt reassessment. We've found that it is extremely beneficial not only to the township but also to residents in that it keeps property assessments as close to true value or market value as possible every single year. So what reassessment means is that 100% of properties in town are reviewed and reassessed every year. And the additional requirement of being a reassessment district is that we are required to physically inspect at least 20%, or about 2,000 properties every year. And we've been doing that again since 1989. So how does annual reassessing affect taxes? Key thing to keep in mind is annual reassessing is revenue neutral, right? So it has no effect on the total tax levy to be collected, has no effect on total revenue required to balance the township's budget. All, again, it is doing is reassessing and allocating the share of the total tax burden to each property in proportion to the value of each property, right? So again, keeping assessed value as close to market value as we possibly can. Purpose of reassessing is to establish and tax according to market value for all properties. So while no one likes to see their assessment go up necessarily, you should be comforted to know that your neighbor is also being assessed at true market value and paying their fair share of the total tax levy. And that's what reassessment is all about. It's essentially about ensuring equity every single year. The alternative to reassessment is a reval. There are many towns in New Jersey who still undergo revals. They typically happen once every 10, 20, 30 years. They are highly cost prohibitive. To have a firm come in and assess every single parcel in town at one time is quite expensive. And as you can imagine, with that amount of time passing in between revals, that jump in assessment can be staggering for folks, and can really be a shock. You can imagine if we were to look back 20 years at Berners Township assessments, they'd be quite different than they are today. So again, we've found our reassessing to be highly successful here in Bernards. And then the last note here is that reassessment may cause an increase for some and a decrease for others, and that certainly is the case because again, it's driven by the market. And as we've seen, especially recently, the real estate market can be rather unpredictable. So if you saw our budget adoption presentation this year, we presented an analysis of 16 different properties in town to see exactly how the tax levy would affect those individual homes' tax bills. And what we found was that the range in the tax bill increase went anywhere from a decrease in $90 to an increase of over $90. So it is quite a swing, and it's all dependent on the market in your particular neighborhood. One of the other factors that we consider when you look at how assessments vary is the difference between commercial and residential assessments. So, for example, this year we saw, while both commercial and residential increased, commercial assessments didn't keep pace with residential. And all that means is that a higher share of the tax burden this year is going to be shouldered by residential properties. Last year was the opposite, so it's really strictly dependent on what's going on in the market. So last piece of math, calculating the tax bill. So we know how we come up with our tax rate. We now have our assessment from the tax assessor's office. We got that in the mail in February, and we want to figure out how much our tax bill is actually going to be for this year. So it's, again, pretty simple. Total assessment, total assessed value times the tax rate divided by 100 gives you your tax bill. So in this example, we're using the 2022 municipal services tax rate and our $500,000 home example, and we come up with $1,495 annual taxes for municipal services for this property. And again, keep in mind that this is for the municipal services portion only. It doesn't include the school, county, or the library. And this same calculation can be used for the total tax rate. So like I said, we just use the municipal services portion for this example, but if you know the total tax rate, plug it into that formula and you'll come up with your total tax bill for the year. Okay, so now we understand how the assessed value is arrived at. We understand how the tax rate is arrived at. We've sat through the Understanding Bernards session, and we understand how the budget and the tax levy work. And then we get our tax bill in July, and we try to figure out what is happening with our total taxes. So tax bills are issued, like I said, in July, and that's following adoption of budgets by the town, the county, the state, and the school district. Once that's all done, we wait for the county to certify a tax rate, and we hope that that happens by early July. Because we don't typically have that number until mid-year, the tax bill is issued for the remaining balance. So remaining balance is third and fourth quarter of 2021 in this case. So this example is from last year's bill. And then our estimated and or preliminary amounts for first and second quarter for the following year. So can anyone here tell me how much this property's taxes have gone up in 1 year? Don't feel bad because I couldn't do it without a calculator either. But there is a way to do it just by looking at this bill. And I'll show you that on this slide. So in this example, this homeowner knows that he or she paid $1,381.52 in taxes for the first and second quarters of 2021. Okay? Subsequently, they get this bill, and it shows final taxes due for third and fourth quarter 2021 of $1,451.06, which we see here. Now, this homeowner is obviously very concerned because that's an increase of over 5%. The issue is that they're not accurately comparing year-over-year taxes, right? Because of the fact that first and second quarter are estimated. So this amount that they had paid previously for first and second quarter is an estimated amount. They're not actually seeing their total increase for the year. So the way we can see that, we need to look at two numbers on the bill. First is this total 2021 taxes due and this 2021 previous billed amount. So as we said, the total estimated first and second quarter 2021 equals 50% of the total prior year taxes due. So that's 50% of their 2020 bill. So if we take that number times 2, we come up with $5,526.08, which is their total tax bill for 2020. Now we compare that number to our total 21 number, and we see that our increase is $139.28, or 2.5%. So now you might say, well, that's 2.5%. I know that there is a tax levy cap in the state of New Jersey of 2%. How is that possible? This is another area where we see a lot of misconceptions often. So yes, there is a tax levy cap in the state of New Jersey. It was put into place in 2010. Debatable whether or not it has helped to slow the growth of municipal property taxes in the state. I'll leave that up to you, but in my opinion, I do believe that it has. But what that tax levy cap doesn't mean is that your tax bill can't go up more than 2%. Again, we're talking about the tax levy, so the total pool of tax revenue can't go up more than 2%. But as we just got done discussing, based on assessed values and the tax rate, your individual bill could be different. The tax levy cap also states that municipal services tax levy can increase no more than 2%, with exceptions, including pension and health benefit increase costs, debt service, construction, and emergencies. It also allows municipalities to bank unused levy dollars for 3 years. So that is true. Essentially what this means is that although it is a 2% levy cap, because of these exclusions, a municipality could in fact increase their levy more than 2% in a given year, depending on their increases for healthcare costs, debt service, and the amounts of levy cap that they have not used in the prior years. So for example, for this year's budget, the township's levy is increasing 1.98%, so we are under 2%. However, with all of those exceptions and our cap bank that we have, that tax levy, in theory, could have gone up an additional $1.2 million, still would have been within the levy cap law, and would have been a 7.66% increase. So I think that's where some of the confusion comes in regard to the levy cap when you see in some towns increases well above 2%. That's how it happens. There are certain allowances in the cap law. Now, there is also an appropriations cap, which would put some restrictions on that amount. So in reality, 7.66 probably would not be feasible. But as far as exceptions and cap banking go, in regard to this law alone, 7.66 would be our number for 2022. And then lastly, using allowable exceptions in bank levy dollars, Berners Township typically increases the municipal services tax levy more than 2%. That is not the case since 2016. 16 or 17, we've been under 2%. Prior to that, we were just over 2.3, 2.4%. Now, that's not to say that will always be the case, but that is a goal that we've strived for. And one of the things that we talk a lot about when we're talking about the budget is a responsible budget, right? So just because it's under 2% doesn't mean it's a responsible municipal budget, right? We can slash services, we can not fund projects, we can essentially kick the can down the road for projects to bring that number down essentially as low as we'd like to, but that wouldn't be a responsible municipal budget. Our goal is to maintain the services that we provide, maintain all the infrastructure that we have in town, and do that while bringing in the most reasonable tax levy that we can. So that's, that kind of wraps up what we have to talk about as far as the tax levy. So then we'll look at what that levy funds, right, which is the municipal budget, which is essentially the important part. So this is the list of general budget items that are funded by the budget every year. We adopt our budget annually, and I'll just talk a little bit about what the process is for the budget. So it's a relatively long process. We start typically in September. That's when all of our departments start to compile their requests, submit those requests to finance. Then in November, we meet with our department heads to discuss just the capital budget. Typically, capital budget for the last few years has been around $6 million. The initial request for capital from our department heads has been $8 to $9 million every year. So we have a lot of work to do every November to kind of whittle that number down to something that is manageable. So once we have that number, we put that together with our operating budget and begin budget workshops with our township committee, usually in February. And that's really to refine the budget all the way down to what a acceptable tax levy will be. We have that number by the end of February, and we introduce our budget in early April. 2 weeks later, we hold a public hearing on the budget and adopt. So, that's September to April, we're working on the budget. Then we have from May to August to do what we have to do, and we start over again. So it is quite a long process. There are a number of reasons for that, mostly because we are waiting for numbers and information from other entities. So, for example, we're waiting for the state of New Jersey to give us the new health benefits rate for the year. We're waiting for our insurance fund to give us new insurance rates for the year. We're waiting for our interlocal contracts who may be expiring, and those are in the process of being negotiated. We need those numbers. We're waiting for assessments, and every 3 years we are subject to state examination of our budget, which extends that waiting period even a little bit further. But if all goes well, by the end of April we have a budget and we're ready to carry on with our year. So of the total budget, what are the pieces that it funds? So this just takes a look at the proportionate share of each of the major budget categories. As you can see, public safety, not surprisingly, is the lion's share of the budget. That is typical. So that public safety category funds our police department of 38 uniformed officers, funds our crossing guards, funds the purchase of police cars, our Office of Emergency Management, financial aid provided by the township to our volunteer fire and first aid departments, and our uniform fire code. The second item on the list, is our capital improvements at just under 13%. So as I said, for 2022, total capital budget is $5.7 million, and that is for larger infrastructure and equipment purchases. And we'll take another look at capital a little bit later on in the presentation. Our reserve for uncollected taxes is actually the third highest budget category that we have. So that reserve is actually a statutorily required appropriation that we have to put into the budget. And that's really driven by the fact that we are, as we discussed earlier, the collecting agency for taxes for the school and the county, and the fact that we need to pay those entities 100% of their tax levy regardless of our collections. So this is here as a safety net in the event that we don't collect their total levies. We would charge out this appropriation to make sure that we could fund them. As I said, fortunately, we typically collect north of 99% of our tax levy. So what happens with this appropriation is it gets charged out at the end of the year, it flows to surplus, and then gets used to fund future year's budget. And as you recall, the surplus amount in the budget is typically around 30 to 33%. So we actually count on a big piece of that surplus to be regenerated from this reserve for uncollected taxes appropriation. Public Works is next on the list. A lot of service coming out of this 9% of the budget. So Public Works has a total staff of 37. It includes the roads division, buildings division, grounds, and fleet division. This also includes all of our snow removal for the township. So on roads, we're talking about 111 miles of roadway, 70 miles of sidewalk. Roughly half of that 70 miles are considered primary and are snow treated after every snowstorm. The buildings division maintains our town hall, police department, engineering and DPW buildings, our health department, community center, and grounds and community service buildings. In fleet, those folks take care of 150 passenger vehicles, trucks, and heavy equipment, 250 pieces of small equipment. In grounds, that division is maintaining Mountain Park, Pleasant Valley Park, Sons of Liberty, Dunham Park, Rebel Hill Park, Southern Park, War Memorial Fields, Astor Fields, Allen Street Gazebo, the Liberty Corner Fire Company Field, and the Basking Ridge Fire Company Field. So of that 9%, as I said, a lot of service being funded there. As far as snow removal goes, if you drive around shortly after a snowstorm, you'll know that Bernards Township's roads are typically clear before our neighbors, and that's something that we're very proud of. However, of course, it does come at a cost. So, for example, in 2021, snow removal cost the township just about $620,000. Depending on the year, that can range anywhere from $350,000 to $750,000 for snow removal every year, and that's included in that 9%. In the general government category, just over 7.5%. That covers 44 employees, includes our administration, HR, municipal clerk, finance, purchasing, IT, tax collector, tax assessor, and engineering. Pension and Social Security is our next category, so that covers both pension system, employer contributions for the PERS system, and police and fire system. Also, employer Social Security taxes for 150 full-time equivalent employees, and that number jumps to over 300 employees in the summer when we have our rec programs and pool open. So quite a few employees being paid. So again, trying to apply that to real dollars, that budget. We're using, again, our $500,000 example home, applying those percentages of the budget to the municipal tax bill for 2022, and that gives us essentially an itemized bill for services for this home in Bernards Township for 2022. And I think this is the nice part about local government. We see our income taxes coming out of our paychecks every month. It goes off into the abyss, and who knows what happens to it once the state and Fed get a hold of it. Here's a pretty down to the penny accounting of what your property tax dollars are being used for. Last item to talk about as far as the budget is concerned is our capital budget. So every year part of our budget is a 5-year capital plan. We maintain that plan in order to project our long-term infrastructure and equipment needs, right? Not only is that a requirement of our budget every year, but it's also a very useful tool for us, particularly because we are a pay-as-you-go township, and we'll talk a little bit more about that as well. Each year, a portion of the budget is dedicated to capital projects according to that plan. And as I said, this year, that's about $5.7 million. Our capital projects include larger, higher cost infrastructure expenditures and equipment purchases. And as I said, we are pay-as-you-go in Bernards Township. So that means that all of our projects are funded by the current year's budget, and we do not require debt issuance. And we are, in fact, debt-free in Bernards Township. We have been since 2017. That was the last time we made a debt payment on our open space debt. Prior to that, the last time that we issued debt for a non-open space purchase was in 1991. So this has been a long-standing philosophy of the township. And, this is certainly something that I cannot take credit for. This is, years and years of previous administrations working towards this goal, previous township committees who felt that this was extremely valuable and extremely important thing to do. And we are now doing our best to make sure that we can maintain that philosophy. One of the things that's really helped us towards that goal was the sunset of the municipal open space tax in 2018. So prior to 2018, the township had its own municipal space tax in addition to the county's open space tax. In 2018, the township committee at the time determined that they had done everything that they had hoped and planned to do with that open space tax and felt that it was appropriate to let that tax lapse and allow that those tax dollars to roll to the township's capital budget every year. That amounts roughly $2 million every year that we've been able to bolster our capital budget with every year. We can certainly maintain zero debt, but it requires careful planning and I think probably a little bit of luck. But as I said, we have a few safety nets in place in the event of unforeseen, unexpected expenses, which are certainly inevitable, but that's something that we keep a very close eye on. And lastly, fiscal stewardship. So, this is the most important aspect of all this in our world, in the township's finance department world. We leave the operational piece, the service piece of what the township does to our departments, to the professionals and the folks who are working in those departments. What we're really concerned with is, are we providing those services as cost effectively as possible, and are we setting the township up to maintain our strong financial standing? As Annie mentioned, in finance we always say that the money we spend is not our own, and that is certainly something that I know I take very seriously. I know that sentiment is shared by my staff and township committee. As a taxpayer in New Jersey myself, I find it, very important to make sure that we're doing everything we possibly can to limit the impact of tax and the operation of the township to the taxpayer. So one of the metrics that we look at when we try to measure how we're doing is this comparison of the tax rate, right? So this chart is showing Bernards Township's tax rate. This is the total rate from 2021. Township and library, this is school, and this is county. And we compare that to the average tax rate of all towns in Somerset County, and then the average of all towns in New Jersey. And when we compare to New Jersey, you can see we're coming in at less than half of the tax rate of the average in New Jersey. Now, there's certainly many things that go into keeping a tax rate down, one of those being a higher rateable base, which we're fortunate to have here in Bernards. So there are some other metrics that we take a look at. Hopefully this isn't too hard to see. So this is an infographic that we put together. We started putting together a couple years ago. It's posted on the township's finance page on the website, and we update it every year after the audit. So this is last year's infographic, and we'll be updating it for 2021 once our audit's completed. So a couple different things that we're looking at here. It's a little small, it might be hard to see, but this first chart up top, how are we doing as far as controlling the growth of our municipal levy? So what this does is takes a look at the increase of the tax levy for towns in each county in the state from 2005 to 2020 in this case. And then this line in red is that increase for every town in the state of New Jersey. So as you can see, over 15 years, the increase in municipal services taxes in New Jersey went up 80%, compared to Bernards, where that increase is under 20%. So that tells us, we're doing a pretty good job of keeping that levy as flat as we possibly can, despite our cost increases, despite all the things that we need to continue to do. We're doing our best by being creative with revenue, funding our budget through surplus, making sure that we're regenerating our surplus every year to keep that levy as low as we can. This second chart looks at debt and taxes per capita. In this one, we're comparing to, I think it's 15 or 16. These are were the AAA bond-rated towns in New Jersey back in 2020. We were last bond-rated, I think back in 2007, I believe. We have not since been bond-rated because we have no debt, but we do still consider ourselves part of this group and thought that this would be a good group to compare ourselves to. So we are the only town in the group with zero debt, so we have no debt per capita. As far as municipal taxes per capita, you can see we're essentially tied for second lowest comparatively. One of the other things that we hear often when people take a look at our financials or take a look at our audit is, why are we sitting on all these reserves? How come we're not spending all this surplus and dropping taxes for everyone? Well, we want to make sure that we're maintaining a responsible level of reserves. So comparing again to that same group, where are we as far as reserves per capita? Here's the average of all the AAAs, and here is Bernard's. So, we're not the highest, we're not the lowest, we're kind of right in the middle of the pack, and that tells us that we're in a healthy position for the maintenance of our surplus. And then lastly, just a demonstration of the total local property tax gross. This compares the growth of the school levy, the county levy, and the township's levy down in green here. So I think that's all I have. I really do want to sincerely thank you all for coming. You have certainly done your civic duty for today and coming and hearing us talk about municipal finances for an hour. So thank you very much, and we're happy to answer any questions that anybody might have. Oh, yeah, if you don't mind.
Oh, I think it's fine, right? Everybody can hear.
Yes, I would like just to find out what factors may affect the assessment, like the assessment for the properties.
Mm-hmm. So it's, as we said, it's all about real property, and the biggest factor is market value, right? So one of the biggest tools that our assessor's office uses, particularly if you are not part of the 20% that gets physically inspected in the year, is comparable sales in your neighborhood, right? So just like your real estate agent would use comparable sales to help you determine what a good offer for your home would be if you were selling, or conversely, if you were buying a home, our assessor's office uses that same MLS data to see what's happening with homes in your neighborhood to determine the market value.
What happens if I am the 20% of that property need to be assessed for every 5 years? Mm-hmm. What factors are you looking at?
So they're looking at the model of your home, the size of your home, quality of materials in your home, has it been renovated recently, all those factors of the actual structure of the home.
And I'm sorry,
No
one
problem.
question. And also, what type of the property? Because you mentioned before, there are two types: residential and also the business, right? Mm-hmm. Yeah. And what happens if I registered a business in my own property?
So that's
it's a residential property. So you're gonna be after 5 years, or when my property is assessed again, my property will be assessed as a residential property or the business property, or you have something called hybrid.
So that would be a good question for our tax assessor's office. There are certainly differences as far as how commercial properties and residential properties are assessed. Profit and loss goes into the calculation for a commercial property as opposed to residential that's strictly based on the market. As far as when that would change in your particular circumstance, I think that would be a good question for Dave up in the assessor's office. He'd be happy to help you out with that.
Thanks.
Absolutely.
So I was among the lucky 20% that got reassessed this year. My question for you pertains to the problems with the reval approach as opposed to the regular reassessment. I used to live in a place, and it'll remain nameless for this conversation, but they had not done revaluations for a long, long, long time. And due to changing aspects of the market in different sections of the town and what have you, you had this dynamic where properties that, based on market value, if you went to go buy one, really skyrocketed in value, weren't paying that much in taxes. Meanwhile, there were properties that fell in value that were, covering the share that those higher value properties, truly higher value properties, should have been covering. Is that a dynamic you see as among the problems with the reval approach?
Yeah, absolutely. I think you said it exactly, and it's, you end up with a highly disproportionate share of the tax burden, right, after a number of years being paid by a property whose value may have decreased over time, whereas you may have a property whose value would be much higher today, paying a much smaller piece of that tax burden. So what reassessment does is make sure that that's being rebalanced every year.
Yeah, what I termed it as, you wind up with this reverse Robin Hood effect, where lower valued properties are paying a disproportionate share of the tax burden as
Yep.
opposed to higher value.
That's absolutely right. Yep. Anyone else?
Yeah, I have a question.
Kippy?
I know that we sunsetted the open space tax. We could have given that back to the taxpayer, correct? Can you just say what would have happened potentially in the years subsequent if we had decided to rebate the taxpayer?
Sure.
Because I think everybody might think, oh, wow, I'm getting this tax decrease. But if you could say from a financial point of view, the impact that it would have had in years after that without the tax.
Sure. So folding that, what was essentially $2 million every year of the open space tax into our capital budget was part of the plan long-term for continuing debt-free, paying off all our debt and staying that way. So prior to the open space tax sunsetting, the capital budget was anywhere from $3.5 to $4 million, and that was getting us through. The timing lined up in such a way that some of our larger infrastructure needs were going to hit at the exact same time that the open space tax sunset. So the choice at that time was fold that money into the capital budget or begin or continue to issue debt for capital projects. The timing really worked out nicely to allow us to continue debt-free with a net zero tax impact to the taxpayer. Normally, if we would have had to increase the tax levy by that $2 million to fund a $6 million capital plan, you're talking about essentially 4 tax points in a year, which would not have been feasible. So again, that was a part of the long-term plan to get Bernards Township into a debt-free position. That was a key piece of the plan.
Okay, thank you.
Sure. Yes, sir.
So excellent presentation, very informative.
Thank you.
Thank you very much. My question is that in terms of the assessment of efficiency of your taxation per se, so we have talked about lower rate per $100,000 for tax rate. My question to you is that given the variation of population as well as property value, do you have the number in terms of what is the average tax per capita paid in our township versus other township per se?
Versus other towns, I don't have here. I can tell you the average assessed home in Bernards for 2022, I think was $633,000. That worked out to a total tax bill of just under $14,000.
Yeah, that wasn't my question.
Okay, sorry.
Question is that it's not based on property, it's based on the population. For each person on average living in our township, what is the tax contribution they have? Let's say, Prime Minister, they may have $5,000, per person tax.
Mhm.
Because we want to take a property away, just say on average each person,
Gotcha.
how much tax each person pays.
That's actually this chart that we were looking at here. So the blue, it's a little small. Yeah, the blue line is municipal taxes per capita
Okay.
for each one of these towns. For Bernard's, that is highlighted in green. So for us, now keep in mind this is year-old data. We'll update this, but this was what does that say? $866 per capita. And you can see that we're essentially tied for second lowest out of these 15 other AAA bond-rated towns that we compared to.
Excellent. Okay, great. Thank you very much.
Sure. Any other questions?
I have another question.
Yes, sir.
I was speaking to a friend of mine and how proud we were here in Bernards Township that we were debt-free, and I had forgotten that he served as bond counsel for a number of towns. And it's like, no, you don't want to do that. But could you just expand upon why maintaining this debt-free approach is important for the township?
Well, it's the cost of debt is high, right? You know this from your own household budgets. If you put it on a credit card, it's going to cost you more in the long run. And that's just been a philosophy the township has taken. We've been just debt averse, allergic to that additional cost in borrowing if we're able to avoid it. And you're absolutely right. I've had those same conversations with folks who, tell me that we have to get Bernards into reality and get you guys some debt. Well, we're very fortunate that we don't have to be in that position, and we hope to continue to be able to do that.
One follow-up, Sean. How unique is that we have 565 towns in the state. I'm not asking you for a number, but Bernards is an outlier in this regard?
I would say, yeah. I know there are other debt-free towns in the state. I couldn't tell you how many, but they are few.
Okay. One final question, separate one. We're in this inflationary environment, one that perhaps we haven't seen at this magnitude in decades. How does that make municipal budgeting more challenging for you?
Well, it keeps that or it makes that 2% levy increase a challenge every year. And that's why I talked about that responsible budgeting. So come September, when we start to work on the 2023 budget, we may see that that inflation has caused our expenses to increase. We certainly do everything we can, find other sources of revenue, use additional revenue where we can strategically, tap our reserves where we can strategically to try to offset those. But there may be instances where it's, that 2% levy increase is just not possible if we want to maintain the same level of service that we're providing now. So, those increased costs, we are certainly feeling just like everyone else is, and we're certainly keeping an eye on those for next year.
One of the things that we've discussed is learning about energy tax receipts and the impact of that. Could you maybe share with folks that might not be aware of that? You have it in your slide, and maybe expand on that and how important that is and potentially what we can do.
Yep. Very, very basically, energy tax receipts were a tax on utilities that were supposed to come back to the municipalities to fund their budgets. Over a decade ago, the formula that was used to calculate that amount of tax coming back to the town was abandoned, and our amount of energy tax receipts has been stagnant, flat. There are estimates that we've done that the number that is owed to us is in the tens of millions. So certainly that would be very impactful to our budget and our budget moving forward, offsetting of increased costs if we were able to recoup some of that money. And I know that there is some effort in state legislation to try to get that back to us. So certainly fingers crossed for that, because that would go a long way. Yes?
So obviously we're super proud to be debt-free and no one wants to take on additional debt, but given some of the other issues annually that we have in the town, especially around climate and obviously the snow and things getting colder and with our roads, are we weighing, keeping that debt against, what needs to be done for the town and improvements that we can make? Or are we just like keeping that in the forefront? We want to make sure that we're debt-free, but are we doing some exercise where we're auditing against those two to make sure that the town is getting what it needs?
Well, I think the goal is to make sure, first and foremost, make sure that we're providing the services that we provide, right? And that includes everything from snow removal to the professional staffing, everything we do. So that's the first goal. Second goal, I would say, is probably making sure that we can do that without incurring debt. If it came to a position where we found that costs just increased so much that we couldn't do that, that's certainly a discussion that would have to be had and a decision that have to be made by the Township Committee. But I think I can answer that yes, the main goal is maintaining those services. Anyone else? All right, well, thank you again very much. Certainly, we are here anytime that you have questions, so feel free to reach out to us, and thank you again so much for coming.
I just want to close and thank especially Sean and Annie. I hope that you can appreciate the transparency and to know that this is the resource that we have in our town. When I first met with the administrator, he reinforced to me that it is first quality of service and then at the lowest cost. So serving our residents is super important, and I was very impressed by that. So I am just very grateful on behalf of the Township Committee and especially Deputy Mayor, who is here with us. We are very grateful for you to create this as an educational forum for us. For those that came in late, this is going to be recorded and will be posted on the website. So for those that maybe had other appointments and things, that they can review this at their leisure. Again, this affects every resident, and so I'm very grateful for you to create this for us and to answer our questions. Thank you guys for coming tonight. Thank you.